Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the CBOE Market Volatility Index, ticker symbol VIX. And I've left my lines on the chart from last week so you can see where the range is. I could also say where the range was. And these parallel lines were drawn from the high back here in January and the lows drawing support. It's a flatline support connecting as many of these lows as possible. Today, the VIX is showing a bearish engulfing pattern with a close below that support level. So what does that mean? Well, the volatility index is a leading indicator. So if it is showing a bearish sign, that is going to be bullish for the S&P. The next level of support for the volatility index is down here. Whether or not we'll go down that far to test it, we'll have to wait and see. But I'm going to eliminate this former resistance line because once support is broken, that support level reverses its role and it turns into resistance. Keep that in mind when I point you to the videos at the end of this particular report, because I have a role reversal video that you'll be interested in watching. Now, the forecast for next week for the VIX is going to be lower with a possibility of a bounce midweek. We have a shortened trading week next week, with Monday being President's Day. The markets will be closed. The Canadian markets will be closed as well because that's family day for them. And so we have a shortened trading week after the monthly expiration Friday, which is today. And if you've listened to my reports before, you'll know that I've said the week after the expiration week is usually the most volatile week of the month. And being that it's a shortened trading week, on top of that, we could see added volatility next week. Even though the VIX is dropping, we could see bigger moves in the market than what we've seen this week. So keep an eye on that. Now, let's flip right to the S&P 500, which is the ETF known as the Spiders. We broke out of that trading range as well right here. Volume is increasing, so it's actually a short-term sign of strength. Next resistance for the S&P is up here from the highs back in December. So I'm going to erase this support level. We did not pull back to the 20-period moving average. Instead, we're moving higher. Resistance is right here. So the forecast, being that the VIX is going to be lower, forecast is that we will go up to test that resistance next week on the S&P, and then we'll have to keep an eye on volume. The stochastics is showing overbought, and the CCI is showing overbought. Those are indicators that might even remain in an overbought condition until we see a pivot point lower. So keep an eye on that. My advice would be on any long positions, I would trail the stop up and be very, very cautious. I posted an article on the Market Guys Facebook page that talked about some of the dangerous indications that we're seeing, particularly for those who time the market. And it looks as though the sentiment is really showing danger signs at this particular point. There's conditions right here. Just in the first sentence, you can see what we're talking about here. And so when the contrarians look at the optimism versus the pessimism in the market becomes more bearish as investor sentiment becomes more optimistic. And I know that might seem a little confusing, but what happens is there's an inverse relationship to public opinion that the contrarians depend on. So we will definitely have to keep an eye on the technical signals, because the charts do not measure opinion or emotions or anything like that. We'll just have to look at the volume. If the market goes up and starts to drop in volume down here, we could be seeing the beginning stages of a pivot point lower. But until then, we have to wait for the signal. On the diamonds, ticker symbol DIA, you'll see that we did break out of that resistance high. Next resistance for the diamonds is going to be up here, right at the highs from November, actually. And so I'm going to erase this support level and say that the market will most likely go up to test that resistance as well next week, with the indicators, both stochastics and the CCI, showing overbought. Volume is still showing strength, and we're going to keep our eyes on that one as well to see if we get a pivot point lower in the short and trading week. I want to draw your eyes to the Russell 2000. This is very interesting. We have an upward leg here that is quite extreme. I'm going to erase all these because I want to draw some fan lines here, and I want to show you the significance of what a fan line really is used for. If we have a low from here connecting to this low and projecting out, you'll see that that's measuring the upward leg. We have this week an acceleration in that leg, or the angle at which the prices are moving higher. And so that is a danger sign, because the more vertical the price action gets, the more likely it's going to pull back. So we have a resistance point right here on the Russell 2000, very, very close to what we're seeing. I do think that next week the Russell 2000 is going to break down below both of those fan lines, and that would most likely trigger the other markets to start to sell off. So again, short term, we might see a little bit higher. Longer term, I think we're going to go lower. This is a reading that I've been getting for the past 3 weeks now. I want to show you something on the weekly chart. This is a 3-year weekly chart of the Russell 2000, and we have 8, count them, 8, 1, 2, 3, 4, 5, 6, 7, 8 green candles in the row. That has not happened at any time in the past 3 years. That is called a stale green light. We're long overdue for a red candle. I think that red candle will show up next week. Stochastics is showing extremely overbought, and we have a possibility of the stochastics dropping next week. So keep an eye on the Russell 2000. If we look at the Qs, that's a NASDAQ market, ticker symbol QQQ. We see another long stretch of green right there. That is, again, 8 green candles in a row. But the difference in the Qs is that the volume is steadily dropping on the NASDAQ on the weekly chart. Again, that's the first time that that's happened, where the volume is dropping as the green is showing up. And if I go to the daily chart, you're going to see a slightly different picture with the resistance right here. The NASDAQ actually had a red candle today. So I'm going to erase that, and I'm going to keep the support level that I drew from last week. This is what we have to watch out for. I think we might go up just to bump our heads against that resistance, and then I think we're going to pull back. The stochastics is already starting to turn down, as well as the CCI. We're seeing a drop in the most recent highs here, and that is a negative reading on that one as well. If you'd like to learn more about what we do at The Market Guys, just go to themarketguys.com. The video that I'm referring to with regard to role reversal is found on the video tab. Just scroll down just a little bit and you will see the role reversal right here off to the left. And then on Monday, if you go back to the home page, on Monday, even though the markets are closed for President's Day, we're having an open house Q&A. Just click on that link. It will bring you to a registration page where you could save your seat. You could submit stock symbols to me. I'll analyze those stocks and I'll answer your questions. This is an action-packed 1-hour open house session that you're invited to. It is free, and you're more than welcome to invite your friends and family. So I'm looking forward to speak with you on Monday. Have a great long weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.